Good evening, all the participants. Welcome you all to this webinar number 2 on CSR-2 for this report on corporate social responsibility. I am Praveen Khan, Company Secretary in Employment and Central Council member of your institute. I welcome all the participants at this webinar on CSR-2 report on corporate social responsibility. Friends, as you are aware that the central government has notified the Companies Accounts Amendment Rules 2022 on 11th February 2022, which are effective from 12th February 2022. This is the right time to take up this important topic on this webinar, wherein we can deliberate all the practical aspects relating to this form CSR2. Earlier, there was no form prescribed to furnish a report on CSR. Now, through this, the notification, Ministry has introduced the same. Every company covered under the provisions of subsection 1 of section 135 is now required to furnish a report on corporate social responsibility in form CSR2 to the registrar. The CSR report is required to be filed for the financial year 2021 onwards. The form CSR2 is to be filed as an addendum to the form AOC4 or AOC XBRL or AOC4 and BFC as it may be applicable. However, for the financial year 2021, the form CSR2 shall be filed separately and the cutoff date is 31st March 2022. This form CSR2 is complete in all respect and require the concerned company to provide each and every detail as required to be complied under the section 135 and its rules as in constitution of the committee and disclose at the website and about the impact assessment, etc., etc. The form is very well framed by the Ministry of Corporate Affairs. The CSR2 may be useful for data analysis by the Ministry for its regulation and better implementation of these provisions so that the CSR implemented is in its true letter and spirit. When the CSR concept was introduced, it was made a voluntary exercise and corporates were only assumed to maximize their contribution for the social causes. However, it was observed from the experience of few years that the CSR funds were not being channelized in their true spirit by many organizations, and consequently the government has made many changes in the recent past like introduction of impact assessment, transfer of unspent amount, and the details of capital assets created in an introduction of form CSR1 and now the introduction of form CSR2. It gives an idea that the government is taking these provisions very seriously and expect the same seriousness from the corporates also. So to have the deliberation on this topic and to have more clarity on the provisions and its practical aspects, we do have with us two eminent faculties. First one is Mr. G.V. Srinivas Murthy. Mr. Murthy is a practicing company secretary and partner in Unnamati Consultancy Services LLP. And my second speaker is Shri Praveen Khan. He is head group CSR in Spark Minda Group. I welcome you, Mr. Srinivas Murthy and Mr. Praveen Khan on behalf of the institute. Mr. Srinivas Murthy will be speaking on the technical aspect of the compliances part of CSR2 and the e-forms, and Mr. Praveen Khan will cover the practical aspect of filing and compliances part. I would like to briefly introduce to my both the speakers. I'll introduce first Mr. G.V. Srinivas Murthy. Mr. Murthy is a practicing company secretary and consultant in corporate finance since February 1994 and is a partner of Unnamati Consultancy Private Services LLP. He is an arbitrator for BSc and NSc and consultant for the State Bank of India Technical Consultancy Cell at Bangalore. He has a banking experience of more than 15 years and served as a full-time company secretary in SBI Capital Market Limited in Mumbai for a period of 5 years and is one of the co-founder and director of CGEM Corporate Services Private Limited. You are welcome, Mr. Srinivas Murthy. I'll also introduce Mr. Praveen Khan. Mr. Praveen Khan is head group of CSR in Spark Minda Group and he has an experience of more than 15 years in the industry. He was chosen among the 25 CSR professionals of India by the CSR Times, declared among the 50 most influential leaders in CSR by the World CSR Congress, and 25 impactful CSR leaders by the CSR. His CSR program at Spark Minda was won National Award in 2019 by the Ministry of Corporate Affairs, and Mr. Karan is an expert panel of IICA, member of CSR Committee of SOCM, and member of CSR Committee of Northern Region of CI. I invite all the participants to raise their queries, which would be taken up during the webinar once the address from both the eminent speakers is over. With this, I now invite Mr. Shri G.V. Srinivas Murthy for your address. You are welcome, sir, and the stage is yours. Please go ahead.
Thank you, Mr. Praveen Soniji. Very good afternoon to all my professional colleagues and Mr. Praveen Khan, my co-panelist. It gives me immense pleasure to share my thoughts on the CSR-2 report, which is made mandatory with effect from financial year 2021, meaning we need to file this before 31/3/22. So what I have done is I have just divided my presentation into 3 parts. The first part is just talk about the circular instructions, which was made applicable with effect from 22nd January 2021, which is the landmark circular, which is the watershed circular, which has made all the companies which are covered under Section 135 to comply with various provisions of the rules. And then, of course, the latest Companies Amendment Rules 2022. So that is the first part. The second part, I have also thought that how to go about filling up the forms, how to make it easy and quicker to go through the format. So I have just mentioned some of the important points which you need to be kept in mind, and how the documents will have to be kept in one place so that you can access all the information and fill in the details. That is the second part. And the third part is with regard to the practical aspects of filling in the form and uploading the form. So that is how I have decided to break the presentation into 3 parts. Can I request Ms. Deepa to just share the screen so that I can just go through that quickly, because the time allotted is short, so we can quickly run through this. Yeah. So I'm just calling this as CSR-2 report on CSR, a walkthrough. Yeah. Yeah, please. So as all of you are aware, the Corporate Social Responsibility Policy Amendment Rule 21, which was published in the official Gazette on 22nd January 21, is mandatory. And the above amendment rules has made all the companies which are covered under Section 135 to comply with all the regulations contained therein. Now, what I have done is I have taken some of the important points which are required to be kept in mind before we just proceed with the form as such. Now, new concept which is introduced is called as ongoing project or multi-year project, which was not earlier covered. Now, it can be implemented by a company by selecting a project for implementation in a period of 3 years, and this shall be implemented within 3 years from the end of the financial year in which it is first introduced. And the board, of course, has power to alter this wherever it considers necessary, but the project will have to be completed within a period of 3 years. That is the first aspect. Now, the second aspect, which all of you are aware, that Section 8 company or a public trust or registered society which has got the approval under Section 80G is permitted to carry on the activities on behalf of the corporate clients. Now, effective from 1st April 2021, they should have registered and obtained the registration number from the MCA, without which they will not be able to carry on such activity. But exception is for the projects which were approved by the board before 1st April 2021. Yeah, please, next. Now, the new rules also has laid down that the CSR committee will have to formulate and recommend to the board annual action plan, which is in pursuance of the company's CSR policy. And of course, this all of you are aware, so I don't want to spend much time on this slide. We'll move on to the next slide, please. Yeah. Now, another important aspect which has been brought in is if a company wants to engage international organization, which is also defined under the rules, and the company can engage their services for designing, monitoring, and evaluation of the projects, or for training of their own personnel, so that they can build the capacity within the organization for the purpose of taking out CSR activity. Another important aspect is that the board, though, is responsible for implementation and monitoring of the projects or the programs, keeping in mind the timelines which is set out and the year-wise allocation of the budget which was made, and overall supervision which needs to be taken care. Still, the rules has thought it fit to introduce the certification from the chief financial officer or the person who is in charge of finance to see that the funds which were disbursed have been utilized for the purpose of the project and in the manner which is approved by the board. So this is one important change which has been brought about. Then another aspect is that the company can collaborate with another company and implement the CSR project. However, when such collaboration takes place, the companies will have to keep in mind that they should be able to report separately their respective CSR obligations and the project which were implemented by them. Now, three more important aspects have been brought in the circular. One is surplus. Now, the surplus which is arising out of CSR activities should be flowed back into the same project or shall be transferred to unspent CSR account and spent on CSR projects or programs as per the annual action plan, which is recommended to the board. Or if they are not able to utilize the surplus amount, it should be transferred to special fund, which is specified in Schedule 7 of the Companies Act within a period of 6 months from the expiry of the financial year. This is another important aspect which is to be kept in mind. Please move on. Yeah. Now, the second aspect is with regard to amount spent on CSR, which is excess amount spent on CSR. In any financial year, if a company has spent more than what is required to be spent on a program or project, keep in mind the project requirement. But there is much more spent on the project. Then the company is permitted to carry on that amount, which is excess spent for a period not exceeding 3 years, and it can be set off against the CSR obligation in the future years. So that needs to be kept in mind. And this requires approval of the board of directors of the company to carry forward the amount. Now, CSR obligation amount may be spent for creation of capital asset or acquisition of capital asset. This is another new development. Then the capital asset, though it is acquired or created by the company through CSR funds, it cannot be held in the company in its books. It has to be transferred to the trust or a Section 8 company or the society. And of course, when you do that, please ensure that the entity or the implementing agency has obtained a registration number from the MCA, or even the asset can be transferred in the name of the beneficiaries in the form of self-help groups, or it can also be transferred to a public authority. So that is another important regulation which has been brought into effect. In case now the capital asset is created or acquired, the company has to ensure that it transfers the asset to any of these entities which are mentioned within a period of 180 days from the commencement of the amended rules, meaning these rules came into force on 22/1/2021, and already if there is a capital asset which was created, then the company will have to ensure that it transfers the capital asset within 180 days. If it was not done, another 90 days was given with the approval of the board, and a justification was to be given. So now the time stipulation is over for the projects which were implemented. Now, important point which has to be noted in terms of larger companies is that wherever CSR obligations crossed 10 crores or more in the last 3 preceding financial years, they are required to ensure that an impact assessment is carried out by an independent agency. Now, when it shall be taken up is that when the project outlay is at least 1 crore in any financial year, and if at least 1 year is lapsed, then the project implementation, assessment, impact assessment will have to be taken out, and that shall be entrusted to an independent agency. This impact assessment carried out by the independent agency shall also be part of the board report, and again, it shall also be placed on the website of the company. Now, wherever the impact assessment is carried out and expenses incurred in connection with such impact assessment, up to 5% of the amount or 50 lakhs, whichever is lower, can also be booked as a CSR expenditure. This is another regulation which has been brought in. Of course, current requirement is that not only the policy and project which is approved by the board, the company will also have to place on its website the composition of the CSR committee. That is another requirement which needs to be kept in mind. And of course, the rules has also brought in the new format in annexure to the rule, and that needs to be reported in the director's report. Yeah, please move on to the next slide. Okay. Now, all of us are aware, effective from 11/2/22, the notification issued by the ministry, which was published in the Gazette on 12th February 22, Rule 12(1)(b) of the Companies Accounts Amendment Rules 2014 has made it mandatory for every company which is covered under Section 135(1) of the Companies Act for the financial year 2021 and onwards to file CSR-2, which is a web-based form, and it shall be filed before 31st March 22, as mentioned earlier. For this financial year 2021 alone, it is a standalone form, but subsequent financial years, it will be addendum to your annual filings of AOC4, AOC4 XBRL, or AOC4 NBFC Ind AS. That is the requirement for the following financial years. Yeah. Now, there are some challenges which we have faced while filling up the forms. So I thought a couple of points which I would like to mention here. Scenario 1, CSR project, not an ongoing project other than creation of capital asset implemented through implementing agency. Okay. Now, company has given the details of the project in consultation with the implementing agency. Release a full amount before the financial year. Okay. But however, it is observed in few cases that the implement agency could not implement the project in full. There was some amount which was still to be spent. However, the trust could not refund the money to the company so that it could transfer the money to CSR unspent account and finally transfer to the fund. So this is one of the scenarios we have come across. There is an issue there. So whether the company should put their own funds and transfer to CSR unspent account and then transfer to the special fund. That's the question. Now, second scenario is similar to that, where a capital asset was supposed to be acquired, money was released, but it is seen that the capital project could not be implemented in time, though advances were given to the implementing agency. For example, in one of the cases, we have seen that solar panels were supposed to be installed for the purpose of generating power for a particular community. But unfortunately, the contractor could not complete the project because of various reasons. Now, in such circumstances, how the companies will have to report? That's another question. Now, can we move on to the third slide, please? When filling up the form, one of the important points which was observed by me is that when we go and do the CSR committee, members updation in the form CSR-2, one of the directors who was a committee member then had resigned from the company and he has not done the KYC. Now, how do we proceed in such circumstances? There is an issue. Okay. Then the fourth scenario. See, if you see the Companies Act or the CSR rules, nowhere it is stated that CSR committee meeting shall be held. So that is a question which is there. Supposing the projects were approved through circular resolutions by the board. Now, how do you fill in the form CSR-2? That's another technical issue. These are some of the 4 scenarios I have just jotted down to share with the members. Yeah, can we move on to the next slide, please? Yeah. As I said, the second part of my presentation is how to fill in the form quickly and then upload the form. So from the practical experience, what I have seen is that we need to create a separate folder and keep the following documents or data so that it is easier to fill up the form. One is have the SIN number ready, have the email ID if it is changed so that you can fill in the new email ID, SRN number of the previous financial year, that is financial year ended 20, because we are filing for 2021 as a standalone form. So have that SRN number ready. Then in the tabular form for last 3 years, keep the data relating to net worth, revenue, and net profit. Next slide, please. Then number of directors comprising of CSR committee, names of directors, DIN numbers of directors, number of CSR committee meetings held by the company and attended by the directors. Then the details of CSR furnished in the director's report. The name of the agency through which the CSR project was implemented. Then registration number obtained by such agency. Then amount short spent or excess spent on the CSR project or programs during the previous financial year. Yeah, next point, please. Amount available for set off during the financial year for which CSR-2 is required to be filed. Then in the tabular form, keep the following details. PBT, net profit computed under section 198. I don't know to elaborate the technical aspects of 198 because all our colleagues are aware how to compute profit under section 198 because there are certain amounts which were to be reduced, certain amount will have to be added to the profit before tax. And the net profit adjusted after deducting profit derived from overseas branches or companies which are set up by the company outside India and dividend received from a company registered in India, provided that the company has been coming under the purview of section 135 and also complied with the provisions of section 135. So once these figures are there, it is easy to fill in the form. Then calculations made for CSR obligation based on the preceding 3 financial year of net profit. This, of course, it will be auto-populated in the form, but I thought it is better to keep it to cross-check the numbers. Then project ID for the current year, you will not have, but for the following years, since you would have implemented ongoing project and you would have filed for 2021 this year, automatically the project ID would have been generated. For filing the form in the next year, you have this ID with you readily. Then item from list of activities selected in 7. Then name of the project, local area where it is implemented, location of the project duration, amount spent in the financial year, then mode of implementation, whether it was direct or if it is through implementing agency, their name, registration number, address, etc. Keep it handy. Yeah, please. Then amount spent on administrative overhead, if any. Then amount spent on impact assessment, if applicable. Then amount transferred to unspent CSR account. Then date of transfer to the unspent CSR account. And lastly, the reason why there was a shortfall in the CSR spent by the company. So these are the things which, okay, then unspent amount pertaining to year 2014-15 to the end of the immediate financial year, spent during the financial year on projects or programs. This is what we had observed when we were doing the earlier. But yesterday when we were trying to do another form, this field did not appear. So I'm not sure what is the technical glitch, whether it is in the form or it has been removed. That has to be ascertained only as we go along and implement the CSR file. Yeah. Can you go to the next slide, please? Now, if money was spent on acquisition of capital asset or creation of capital asset, keep handy the short particulars of the property or asset and full address and location of the property, PIN code of the property or asset, date of creation of the asset, amount spent as a CSR amount, then details of entity or authority or beneficiary of the registered owner. That is registration number given by the MCA, if applicable, name, registered address. Yeah, please. Okay. Now, another aspect what has been observed is in the CSR-2 form, there is provision for attaching optional documents. So if the company wants to give any explanation, clarification, or information to ROC, this optional attachment facility can be used. So have that information, that is your clarification, etc., ready so that you can attach. Now let me come to the technical aspect of the form filling. Now, there are 2 ways of logging into your CSR form. Either you go and first log into your MCA website using your user ID or password. Then below the run form, you get the CSR-2 form. Or alternately, you can go to MCA services. Below the run, you will get the CSR form. You click, it will take you to your user ID and password screen, you can enter and then log into the website. Yeah, please. Now, there are 5 sheets. Sheet number 1 contains the following particulars. You will see the screen showing new application or existing application. Now you need to select if it is for the first time you are filling up, you can use the new application. Having filled up, you have saved your form, then you can use the existing application. So these are the options which are available. And there is also an icon wherein you can click and download the help kit, which will help you to fill in the CSR-2 wherever you need assistance. So help kit is also provided in the MCA portal. In serial number 1, please enter your SIN number and pre-fill the this one button. Automatically name, address and email ID will appear. But in case the company has changed the email ID, you can go and enter the new email ID, and new email ID will automatically be updated in the master data. In serial number 2, enter the financial year for which the CSR-2 form is being filed. Okay, and this, as I said, is applicable for financial year 2021 and onwards. And this is an independent form, whereas for subsequent financial year, it is an add-on form. It shall be an addendum to the annual filings of AOC 4, XBRL, and AOC and BOC. Yeah, please. Can we go forward? Yeah. In serial number 3, we are required to enter net worth, turnover, and net profit. That is why I was mentioning, keep all this data ready in a separate folder so that you can just take the figures and enter here. Then the criteria which is applicable to company, whether it is net worth, turnover, or profit, automatically gets auto-populated. This is pertaining to previous financial years. Okay. Yeah, please. Then serial number 4A1, there is a query which says that whether CSR committee has been constituted or not. You are supposed to click yes or no. Up to financial year 2021, as all of you are aware, CSR committee constitution was mandatory. So obviously this has to be yes for the financial year 2021. But going forward, if the CSR spend obligation is less than 50 lakhs, then there is no need for separate CSR committee. Board itself can take care. So that is why this yes, no, or not applicable is provided. Then serial number 4A2 requires entering the number of directors comprising of the CSR committee. 4A3, you are required to enter number of CSR committee meetings held by the directors during the number held, and then the directors attending such meetings. There we need to enter the DIN number. Name of the CSR committee members automatically populates. Then we are required to enter the category of the directors, whether they're independent directors, women directors, or independent women director, or just a director. So that needs to be mentioned, and the number of meetings attended by such committee members will have to be filled in there. Then 4B1, again click yes or no, as a case may be for query whether the company has website. If there is website, yes. If there is no website, you can click no. Yeah, please go forward. Then 4B1, the query is whether any amount is available for set-off as per sub-rule 3 of 7 of the company's CSR policy rules. You can choose whatever is applicable to that. If you click yes on 4D1, then 4D2, the following table will automatically appear. Then you are required to fill up the details therein. In the first field, 3 financial years you need to fill in, that is immediate preceding 3 financial years. And second column, you are required to enter the amount to be set off in the financial year. And third column, fill up the balance amount if any. Yeah, please. Then in serial number 5A, there is a query whether the company has completed 3 financial years since incorporation. Yes, you can. It's simple. You can just go ahead. Then again, if yes, the columns will appear, and you are required to fill up year 1 to 3, and then in the rows you will get to see profit before tax, net profit computed under section 198, and also amount adjusted to your profit figures. That is net profit as per the books, less profit derived from the overseas branches operations or overseas companies, and amount of dividend received from company within India if they are covered under section 135 and if they have complied with section 135 provisions. then automatically the total net profit for section 135 is auto-populated there. In serial 5B, the query is if the company has not incorporated for 3 years since the reporting date, then we are required to select whether it is 1 year or 2 years, whatever the case may be. In serial number 5D, average net profit of the company is auto-populated. We need not do anything because we would have already entered all the numbers. Again, in 6-2A, 2% of the average net profit will auto-populate. And if amount is not spent, then that field will be blocked, disabled. In 6B, if there is surplus arising out of CSR project or program, amount of surplus shall be entered by us, because what is a surplus which is there? We only need to enter in the form. In serial number 6A, amount to be set off for financial year, if any, will auto-populate. Of course, the total figure, how it is addition, subtraction is there, is what is appearing in 60. Yeah, can we move on, please? Yeah, sheet 4. The query in 7A is whether CSR amount for the FI has been spent. If yes, click yes, otherwise no, if it is not done. And if it is clicked as yes, then any of the following 3 buttons shall appear. You need to click on them, whether it is an ongoing project, whether it is other than ongoing project, or whether it is both ongoing project and other than ongoing project. You can select 2 of them if you want. Then in serial 7B1, enter the number of ongoing project for the financial year. The number we'll have to get only once it is auto-populated and when the form is pre-scrutinized for the current year. But following years, since already the ID would have been generated, we'll have to keep that ready and we have to enter in the subsequent financial years. Then the following drop-down table will appear. That needs to be filled up, which is project ID, then item from the list of activities specified in Schedule 7 of the Companies Act. You need to go and select whether it is on education, whether it is on hunger alleviation, or whether it is on environment, whatever, because we know what is Schedule 7. We'll have to pick up as per our project or program approved by the board. Then name of the project, the location, the local area of the project, location of the project, project duration, amount spent in the financial year, then mode of implementation. We have to say whether it is direct. If it is not direct, then if it is through implementing agency, then enter the name and registration number obtained by such agency from the MCA. Okay. So for filling in these details, we have this add edit button that needs to be used while filling up the form. Yeah. Can we go to the next slide? Okay. Now 7B2 for the details of amount spent against other than ongoing project. Again, the table appears only if project ID is not applicable. That is for financial year 2021, it is not available. But details, once it drops down, we can fill in as we did in 7B1. Then serial 7B3 talks of table for ongoing and other than ongoing project, which will drop down again. It can be depending upon the number of projects. It can be 2, 3, whatever projects. And in 7C, we have to enter the amount spent on administrative overheads, if any. There is a provision for that. And 7D, we are required to enter the total amount spent on impact assessment, if any. And 7D, total amount spent for the financial year is automatically populated. In 7F, amount unspent or excess spent for the financial year will auto-populate. Where the value is positive, it implies it is unspent, and where the value is negative, it implies it is excess spent. Now, serial 7G, we are required to see what is the amount eligible for transfer to CSR account. That is also auto-populated. The field shall be enabled only if there is unspent amount for the financial year. Yep. Next. Serial number 7H, if the amount is not spent, we are required to give the reasons for such unspent amount. Then serial number 8, the following table will appear. In the first column, we are required to mention the amount to be transferred to unspent account. Of course, that is automatically getting in filled because we have filled earlier the amount of unspent, that is automatically getting populated here. In the second column, amount actually transferred to unspent CSR account, this should be filled in by us. And in the third column, enter the date of transfer. And the fourth column, deficiency, if any, it will auto-populate again. Yeah, next sheet, please. Yeah, next sheet. Can we move forward? I think it is stuck there.
Deepa, are you there?
Yeah.
I think Mr. Srivasmurthy, this PPT got stuck somewhere. The last
okay,
one.
I think we are at the end of the sheet number 4. Yeah. And sheet number 5 is basically a declaration which needs to be given by the company, wherein, of course, as all of us are aware, the requirement is filling in the board resolution number and date of the board meeting. Then the director who is signing, his DIN number has to be entered. And then once we do that, we can pre-scrutinize the form. After the pre-scrutiny button is clicked, the ID of the project is generated, and that ID number will have to fill in field 7. That is what I had mentioned for the current year.
The relevant page is there on the screen, Mr. Murthy, if you can see.
Yeah. Yeah, this is what we have seen. Then we have to go to the next slide. Okay. Yeah, 8B. In 8B, following table will appear. In the first column, enter the amount to be transferred to the fund. This is an auto population. Sorry, this we need not fill. It is automatically generated system. The second column, the amount actually transferred should be filled in by us. Okay, because whether we have transferred or not, the ministry will not know. So we need to fill in the amount transferred. In the third column, we have to enter the date of transfer. Yes. And in serial number 9, specify the reason if the company has failed to spend the 2% of the average net profit. And in serial 10, if unspent amount of the preceding 3 financial years, that is financial year after 21 has been spent in financial year, no is automatically selected. The field is not applicable for 2021. Yeah. Serial number 11, the query is whether any unspent amount pertaining to 14-15 to 19-20 has been spent in the financial year, yes or no. Once we click yes, then the drop down will show financial year to which the new project pertains, the item from which list of activities of schedule 7, which is what we saw in the earlier screen as well. The same thing will appear. Yeah. Can we move forward? Serial number 12, the query is whether any capital asset has been created or acquired through CSR spent in the financial year. If we click yes, then we are required to fill in the short particulars of the property or asset with full address and location of the property, PIN code, date of creation, amount of CSR spent, then details of the entity, authority, or the beneficiary of the registered owner, then registration number allotted by the ministry, where applicable, because as we have seen that if the project was implemented before 22/1/2021, the registration requirement was not there. That is the reason. Then if no is selected, this field will not appear. So this is what I said. We need to keep all this information readily in the hand so that it is much faster and easier to fill in the forms and upload the form. Attachment box contains 5 optional attachments which we can use, which I had mentioned earlier as well. Yeah. Then, as I said, the sheet 5 is only declaration, which I have already explained. So, for the filing of CSR-2, there is no fee payable. Can we move on to the next screen, please? Yeah. There is no fee payable for CSR-2 currently, and CSR-2 form will be processed in a straight-through mode. On successful submission, SRN is generated, obviously. The email regarding registration of CSR-2 form from the HCA will be sent to the email ID. So this is all the process which we need to go through for filling in the form. So I try to cover in this short span of time the legal aspect, then how we should keep ourselves ready to fill in the forms, and how do we fill in the form. So with that, I will end my presentation. Thank you very much. Please.
Thank you, Srinivasa Murthy, for the detailed presentation. I believe most of the queries from the members have already been resolved because you have technically covered each and every aspect of the form and each and every bullet points. So that is one of the wonderful thing, and I believe we have got so much of queries which people are going to raise, and some of the queries which we do have has already been resolved. So with this, now we'll move again and move ahead to the next speaker, Mr. Praveen Khan, who is head group from CSR Spark Minda Group. And I would request Mr. Praveen to please throw light on the practical aspect of these compliances as far as the issues to be faced by the people into the filing and compliances. Thank you so much. Over to you, Praveen.
Thank you very much, Praveen Soniji. Quickly to check, am I audible?
Yes, perfectly.
All right, great. First of all, thank you very much, ICSI, for having me here in this forum. Thank you very much, Srinivasa, sir, for a detailed insight on the technical aspects of the law. And I never expected this is so detailed, technical, and complicated as well. Being a non-company secretary, I can simply assume that how my colleagues in my office are able to deal with this. So this is something really great from all the company secretaries who've been doing this responsibility on behalf of various corporations. Praveenji, thank you very much having me here. With my allotted time, I would like to talk some of the practical aspects of the law, wherein I'll be talking about the effective role of the board. How today it has become a boardroom discussion, and in each of the board meetings, corporate social responsibility is also one of the agendas. So I'll be throwing a little bit of light on that. The types of the projects, I think my company secretary friends need to know about the types of the projects which qualifies to be the part of the Schedule 7, and that is why I'll be talking a little bit on that. There is a lot of discussion about selection of the geography for projects, whether the local area should be preferred or anywhere else also the project can be taken up. So I'll be touching upon that as also. The difference between the ongoing projects, which is a multi-year project, and one-time activity, one-time program, which is restricted in 1 year. I'll talk a little bit on that. And finally, I'll touch upon a little bit on the impact assessment part and the need of it. So quickly to check, Soniji, how much time will I have to talk on this?
So you do have 30 minutes around.
All right, I'll try to be even lesser than that and try to go more interactive if there are some questions that comes to me. Effective role of the board, before I start talking about it. Since the year 2013, I have been thinking on one part of it. We call it the CSR law. It was enacted in the year 2014. It came in 2013, and the full form of the CSR abbreviation is corporate social responsibility, and then it becomes law. So these two terminologies, to my understanding, are very, very difficult to understand for me. How could a responsibility be a law? It sounds to me that, a mother has to feed a baby. That's her responsibility. And think about it, that the mother is told that it's a law for you to feed the baby. So it is the spirit of the company. It is the social obligation of the company that pushes the company to take up this in the form of a responsibility. And just now, the law, that's an angle of a development professional. I feel as if this is something which is beyond the company's practices, normal practices. This is something which is beyond law also. at times, because here we are talking about responsibility. Well, we also talked, we just heard about the 2% calculations, what Srinivas just talked about. I would also like to reiterate on the point that this discussion should not be limited only to 2%. How is the spanning is for the rest 98%, that is also significant. How is the company behaving and integrating the responsibility in and around the area that they operate? What are the practices, manufacturing practices, IR norms, the way to take care of the community and the employees are there? That should also be the part of it beyond the law. The law says that the CSR spend has to be restricted to employees and their families are not included. So it's restricted only for the community outside your business. But I believe that we should talk about 100% and just not 2%. Anyways, I start talking about the effective role of the board. It's a boardroom discussion. It's an agenda today. And when the law came in place, the board was supposed to create a policy, the CSR policy, which should be approved by the board. How that CSR policy is formed, that's important. The CSR policy should be integrated, to my understanding, to the core business, and a standalone policy which is not related, not integrated to the business will not work better. And therefore, I would like to mention that the policy should be integrated to the business. The board also has to ensure the implementation of the policy in the group. What is the board doing? All my company secretary friends have the role to make the board members aware that, friends, board members, please wake up. It's just not the policy that you formed and approved and your role is done. No, you have to ensure its implementation, and just not implementation, but post implementation you have to disclose, and that disclosure of the contents of the policy related to its report and place it in the company's website. That's going to be your role. And if you are a company secretary in a company, you would be held accountable, because it's going to be your responsibility again to make aware the board that this is your responsibility. Please give them that alarm. Ask them to place the policy on the website. Is it there or not? And then ensuring that statutory specified amount is spent. And if not spent, then what Srinivas told about the unspent treatment, that has to be done appropriately. The board also has to ensure that there is no penalty over the company, and because of the violation of the act which is there in place. Well, there are some projects which is just not for 1 year. There are projects for more than 1 year. The board also has to identify the ongoing projects, which is of more than 1 year. The board also has to do year-wise allocation of budget to those projects. The board also has to transfer or ensure that it is transferred to an account where the unspent money is kept. And last but not the least, the monitoring and evaluation of the projects which has been identified from the CSR policy of the company. These are all roles of the effective roles of the board. So all my company secretary friends, I would like to tell you that it's going to be your responsibility to make them aware about all such points, that these are the things you have to do. Now I come to my second point of discussion, the types of the projects permitted, which talks about the Schedule 7 of Section 135. What are the different types of projects? Let me talk about it. It can be education, livelihood promotion, vocational skill development, healthcare. Very recently, the COVID-19 relief is also added last year in August, as I know. Eradication of extreme hunger and poverty. your corporate social responsibility professional in the group, if he has identified a project which is bringing poverty alleviation, that could qualify, and you have all the right to check whether it qualifies or not. People who are hungry, are they getting food with this project or not? You can check that. Promotion of education, the infrastructure development, maybe the school, the quantitative changes, the infrastructural changes, or the qualitative changes, the sponsoring a teacher and then awareing that teacher. These all falls which qualifies as a corporate social responsibility project. Promotion of gender equality, women empowerment, bringing that gender sensitivity, awareness about it, promotions about it, qualifies. Child mortality, maternal mortality, for which maybe a PHC, a CHC which has been set up, a hospital, a support to the hospital, to the government program, these all qualifies. Combating human immunodeficiency virus or healthcare projects, anything which is being done for preventive or curative healthcare qualifies. Ensuring environmental sustainability, replantation, reduce, recycle, reuse, water conservation, renewable energy, solar energy, this all qualifies. So a big chunk is there. More than that, the employment enhancement program, skilling program, and if none of them is being done, then the contribution to the Prime Minister Relief Fund, the relief fund or the welfare to the scheduled caste, scheduled tribes or other background classes, minorities and women, such as other matters to be prescribed. These all provisions are also there under Schedule 7 of Section 135. So my friends, we all will have to know the overall scope of projects, which is of 1 year in nature or more than 1 year in nature, which could be up to 3 years as far as the law is concerned. It should be known to you. So tomorrow a development professional comes to you with any unknown alien project and asks you that, oh, it qualifies. You can question, no, it doesn't. Just refer the Schedule 7, which gives us an idea about these few programs. I would also like to touch upon one of the points that if you look at the Sustainable Development Goals, those 17 goals of United Nations and the Niti Aayog in India, there is an overlap of Section 135, Schedule 7 with this SDG. These all talk same. These all are same. Poverty alleviation is there. Healthcare is there. Gender issues are there. Sustainability is there. So these all are same. You can also refer the Sustainable Development Goals for that reason. With that, I come to my third point. Why local area preference for intervention? So the law also recommends that you should be intervening in an area which is nearby the company factory locations. हम सबने सुना हुआ है जल जंगल और जमीन के मुद्दे के बारे में. If a company sets up somewhere, it takes land, it takes resources, it engages people, it affects the people staying in the nearby areas, sometimes with some chemical emissions, sometimes with some carbon emissions or things like that. The company has to give back. And that give back is only possible if the company is operating in the local area. The local area of manufacturing and the people around them should be skilled. The environment around it should be clean. The greenery around it should be ensured. And therefore, the local area. At times, it is very difficult for you, for development professionals, CSR professionals, everybody, to restrict it exactly only to the manufacturing area. The law doesn't say that you cannot go beyond it, but yes, the preference has to be there to the local area. So tomorrow, if your board is asking you that why are you spending more only in this area where we are present, why are you not going other locations also, you can answer that the local area, the people, the planet in the local area has the first right to get the benefits of corporate social responsibility spending. And that is why I'm spending here with a preference. With that, I come to my fourth point. Difference between the project which is ongoing and one-time activity which is restricted to 1 year. See, the duration of a project could be of any time. Most of the time, if you're looking for a project which is impactful one, it is mostly and generally not restricted within 1 year. But at times there are some projects, let's say you're going to a school creating an infrastructure in that school. You constructed a classroom or toilet, and you completed the job, handed over the school to the school management committee or to the district education department. Your job is done. That's a one-time thing. You did it. You said thank you very much, and you asked them to continue with that. That can be done within 1 year. But you went to the same school where you asked the teachers for a teacher training program. You made them aware about some of the training techniques, pedagogy. You did that in the first year. Second year, you added some more flavor. You have established some science laboratory out there, and you told the teachers to use that science laboratory for teaching the students. Third year, you added on something else, wherein the soft skill and the life skill modules have been added. You did these projects for the first 3 years in a school, in that very school. It becomes an ongoing project. Therefore, anything which creates that impact for a longer period of time, that is an ongoing project, which has a limitation, of course, of 3 years. A project cannot be of more than 3 years as far as the CSR law is concerned. If you have to continue it for further, we'll have to derive the way that we, relook at that project, get it allocated from the board for the 4th year, 5th year, 6th year, on whatever number of years you feel like. But that would be treated as a new project for your company. And that is just not the ongoing project. But the 1 year project should be lesser, to my understanding. As a development professional, I can suggest we should adopt most of the ongoing projects for the treatment of the unspent also. It becomes easier if you have got some ongoing projects, because you have a choice to allocate your unspent money in those ongoing projects. My fifth and last point, the need assessment, which as per the law is needed for a company which has an average spending of 10 crore or more for the last 3 years, preceding 3 years, or a particular project which has a spending of 1 crore rupees or more, has to be doing an impact assessment exercise. The impact assessment can be of 5% of the total CSR budget and should be restricted up to 50 lakhs, whatever is lesser, you can spend that. Why this impact assessment is required? You did something with an idea that you conducted a need assessment in an area where you have to operate. Post need assessment, you identified 10 projects. After identifying 10 projects, you narrow down maybe 1 or 2 or 3. You started doing 3 projects for which you planned, you allocated some money. After allocation of money, you started implementing it. After the implementation, you did some monitoring, some evaluation for the project. You wrote a very good report about the project. But what happened after all that? From the moment you started as a need, from the moment you concluded as a monitoring evaluation, what have you done which brings in the qualitative and the quantitative impact? 100 people were hungry. Now nobody is hungry. Women were putting up pallu. Now they are pretty well aware. They are accessing mobile phone. The digital education which was there for 50 people has gone to 500 people in that very area. Could you bring in that difference? The social and the economic difference, the literacy rate which was 50% has gone to 75%. The people who are not able to know about their rights are able to know about their rights after 3 years of time frame. This all qualitative and quantitative things would be captured in the impact assessment exercise. Impact assessment, I love Hindi, Prabhav Mulyankan is the typical terminology in Hindi for impact assessment. Prabhav, the work that you did, uska kya prabhav hua, aur uska mulyankan, mulya or ankan. Mulya is value, ankan is measurement. And with this impact assessment, you are able to identify that what difference this project has brought in. And therefore, this impact assessment will bring in a communication to all your internal and importantly, external stakeholders who are the community members also, who could be your investor to the business, who could be your shareholder to the business. You're talking to all of them through this impact assessment, because this would also be the part of the disclosure as far as the law is concerned. The alignment of the project with the business would be done through these impact assessments. The transparency that you are able to bring in from the company to the people who are looking at the company. And that also ensures the dialogue between the parties, which is the company and rest of the stakeholders. These are the benefits. You can know about your project and what difference these projects are bringing in. Well, these are the 5 points which I thought of bringing in to this platform. And I have a lot of friends who are company secretaries and very successful company secretaries, and they're able to implement the law very, very effectively. But at the same time, my final submission would be that law is one part of it, and the implementation, the practical implementation of the law is another part of it. If you also get into this and then scrutinize and question the board, the CSR professional, and to your company people who are involved in CSR, it would become the very, very effective CSR implementation with which the government of India brought in this act in 2013. And we have looked at last 8 years approximately with the enactment of the law, and India is able to be the first country in the world to implement it very, very successfully. I seriously feel very privileged that the companies in India have a law also today to enjoy for corporate social responsibility, and an entity like ICSI is a guiding force behind it. So once again, thank you very much for having me here, Soni ji, my co-panelist, Srinivasan sir. Thank you very much for having me. That's my thought process about this entire discussion for the day. I stop here.
Thank you so much, Praveen ji, for the wonderful deliberations and address on the practical aspect, especially on the comparison you have came out and the various illustrations has been placed. We do have a sufficient time on this program to hold the question and answer. I do have a long list of questions from the participants, because since this is a new topic and people are facing lots of issues and issues while submitting this information on the portal. So I will try to cover up as much questions we can cover up during the session. Mr. Srinivasan, the question is, I would like to take it from you. If as per financial year 21, the net profit exceeded 5 crore limit, means CSR become applicable for the FY 22. Therefore, do the company need to file the form CSR-2 before 31st March 22, or should it file it as an addendum to ASC 4 in the next year?
The rules is very clear that we need to file this as a standalone form in respect of the financial year 2021 before 31st March 22. So there is no option but to file. Otherwise, there will be delay in filing the form, and penalties if they levied by the MP.
Okay. And one practical question is that in lots of people have asked in different languages, but it's in form CSR-2 for the financial year 2021. The point number 3 asking for details of net worth, turnover, and profit. So whether it should be filled in for the FY 2021 or 1920.
It has to be for the financial year 20, because the applicability is triggered based on the previous year's profitability, turnover, or net worth. So whether the company is attracting CSR provisions or not is based on the immediate previous financial year's audited financial statements.
So this has to be for FY 1920.
20, yes.
Okay. Praveen ji, there is one question I would like to take it from you. In the field of ongoing project, the state and district names are not reflecting on the screen and the page is not proceeding further. It is still asking to enter the details, though already entered the same. Can you please advise how to proceed further?
Oh, I lost a part of your question. Could you please repeat?
I'll repeat it again. I'll repeat the question again. In the field of ongoing project, the state and district names are not reflecting on the screen and the page is not proceeding further. It is still asking to enter the details, though already entered the same.
Right. So I also observed this point, and I found that this is something that perhaps has been missed out in this format, for which we definitely can make a prescription to MCA also. But at the same time, when you are detailing about the project, you can mention about specifically about the village, the block, the district, and the geography. Where you are detailing about the project, you can add that for your comfort as far as today's format is concerned, I would suggest.
Okay.
Possibly in the year to come or in the time to come, I'm sure there would be some more columns added where you can add upon the districts and the appropriate geographies out there.
One more question relating to filing on the portal itself only. Praveen, if a company do not have any ongoing project, how will the company submit the form as the submit button is not enabled until we click on the generate project ID? What will happen if we submit generate project ID and at what stage we will affix the DSC?
So I was trying to think about it, why this has happened. And then I thought of possibly the reason is that MCA is thinking to you to have the ongoing projects more rather than a one-time activity project that you are completing in 1 year. And therefore, that prescription is at present not available where you are able to submit that. I'm able to think about it this much. As far as the law is concerned, I'm sure you have the right to choose 1 year project also. Okay, but if this is not able to be submitted today, I'm sure we might have some deliberations and can make that recommendation to MCA again. But I feel as if, and I suggested during my deliberation also, that it is good to have ongoing projects rather than one-time project. As a company secretary, you should also make the board aware. You should also make the your CSR colleagues aware that take up the ongoing projects which has a duration of more than 1 year. That will make your life also easy, and that will also be able to be, let's say if there is an unspent money, so the treatment for that unspent can easily be done for the next year for that very ongoing project, where the board will have the choice for allocation of budget for that very ongoing project also.
Correct. So we can expect clarification from the ministry side.
Yeah.
Mr. Murthy, I have one query for you. If we fill turnover based on the signed financials for the 2021 and the same figures has been filled in the AOC for SPR for the 2021, the same turnover figure is also mentioned in CSR-2. But on doing the pre-scrutiny of the form, CSR-2, it is showing pre-scrutiny that turnover is not matching. And that is filed with reference to 2021. I believe, as you suggested earlier, the data need to be taken for the 1920 rather than 2021.
No, there are two things, Mr. Soni. See, basically, for the purpose of ascertaining the applicability of CSR provisions for the company, we have to take previous year's audited financials, that is 20. That is your net worth, turnover, and profit. So that is as far as ascertaining the applicability of section. But for the current year, when we are filling up for 2021, we are required to enter the turnover of the financial year concerned only, because based on which only we will know what is the. This we have also experienced. There is error which is thrown up. Then, sorry.
I think, yeah, now you can carry on.
Yeah. So this problem we have also experienced, and we just log out and leaving some time, maybe next day or 2 days later, we have filled up and automatically the field has taken already. I mean, there could be some technical glitches, and also we also see that the form just snaps off. All kinds of technical glitches are there. In fact, in some of the tables, we are not able to see the complete particulars also. So there is definitely technical glitch in the form that needs to be addressed. We will have to take it up with the MCA.
Okay, so we need to wait, or we need to just try on the written trial method.
If there is, query, help desk, we can ask them and they can look into it and give the solution.
Okay, so another question to you, Mr. Murthy. If none of the provisions of section 135(1) of the Companies Act are applicable to a company, but if the company is still voluntarily making contribution pursuant of section 181 every year for the CSR activities, then this section is wrongly quoted, whether such company is required to file the form CSR-2?
Once the provisions of section 135(1) kicks in, we have no choice but to implement the CSR, policy, spend the amount. If you have not spent, we have to transfer to unspent account, then transfer to the central government notified fund. So obviously, filing of CSR-2 is mandated, because you have seen some of the fields which I explained. What is the amount which is due? to be spent, whether you have spent, what is the unspent amount, when you are transferred to CSR unspent account, date of transfer, then have you transferred within 6 months to the special fund. All these are there in the form itself. So filing becomes mandatory.
No, but this is regarding the company where the voluntary contributions are made by the company in spite of the fact that the provisions of section 130 are not attracted.
See, voluntary contribution here, there are two views on that. In fact, I myself have raised this. See, if you have earmarked a budget which is more than what is required, more than 2%, you have choice to not to report that portion, and you can say it is a voluntary donation or contribution for some activity. But if you want to treat it as part of it, then you can carry it forward as amount excess spend, and then you can set off in the following year. So both options are available.
Correct. Mr. Praveen, I would like to come to you on this question. Previous year unspent amount need not to be considered, as the new law cannot have retrospective effect. We can therefore put nil amount in the unspent column in CSR-2. What is your view?
So the previous year unspent money, that has to be carried forward to the next financial year for spending up to 3 years. This was the law, right? And so we are looking at the treatment for this. So Soniji, that treatment is very much possible. That is possible for the ongoing projects where it can be allocated for the years to come, up to 3 financial years, right? At the same time, you can even identify one new project for the next financial year where you can earmark that budget and you can go for the spending for it. But that money has to be kept in a particular unspent account, and it should only be taken for the purpose of utilization for those very projects where the board has allocated this project to. This is how the treatment should be.
Can come in here, Mr. Soni.
Yeah,
in fact, I was mentioning in my presentation, these fields for 14, 15 and onwards, if it is unspent, it was appearing on the portal in the form earlier. But suddenly, when we tried yesterday and today, those fields are not appearing. So I'm not sure what is the position, whether it is technical issue in the form or whether they have realized that it was not mandatory. So we'll take it out unless we take it up with the ministry and find out what is the reason. It's very difficult to comment on that particular aspect.
However, in the previous years, it was suggested by the ministry itself that it should be utilized in the years to come. So perhaps I feel as if this might be a technical error in the format today, but the government, the ministry would certainly look at the utilization of that unspent also, to my understanding.
Correct. Mr. Murthy, one question is that it's specifically related to the government company. A state government company who has not yet filed the AOC for the last few years, including 2021. That is, let's say, because of the statutory audit and CH audit are under processes. So will that company be able to file the CSR-2, or they are liable to file the CSR-2 before 31st March 2022?
No, as you are aware, the law says that we are required to take the audited financials of preceding financial years. So if it is not done, in my view, it would not be appropriate and you cannot file. It has to be audited financials.
Correct. So Praveen, just a slightly technical question. In Form CSR-2, the details of the committee members need to be filled up. Should we mention the constitution of the CSR committee as on 31st March or as on the date of the filing?
I think as far as the law is concerned, it should be as per 31st March. This is the law says. However, like if the constitution of the committee has taken place even earlier, it can be mentioned in that format. There is no harm in doing that also. What do you think? I'm not very clear on this point. Maybe Murthy sir or Soniji, both of you can also suggest.
Yeah, my view is that you can give an optional attachment and say who is the present committee members. And the optional attachment, you can say who are the earlier CSR committee members and they have resigned. Probably that's right. Because these forms are not providing fields for indicating the period, etc., for the constitution of the committee.
So better
Yeah,
to
I do also feel so. Sorry.
Better to mention 31st March status and then additional attachment
Yeah.
that this is the current situations and the current constitution of the committee.
I think that's a better treatment, I guess. Both the documents will clarify this much better way.
Correct. Mr. Murthy, in point number 2B of CSR Form 2 Help Kit, it talks about entering of SRN of Form AOC 4 filed by the company for its standalone financial statement. Now, which SRN number is to be entered? Is it for the FY 1920 or 2021?
For the current year, we are required to file, take the SRN number of
1920, that means.
Yeah, because that will only trigger whether 135 is attracted or not.
And the continuation question is that whether the figures to be entered in Form CSR2 should be absolute figures or should be in thousands or lakhs or crores.
I think whatever in the annual report we would have furnished, and in the AOC 4 what we would have furnished should be entered. Otherwise, that error will throw up. It is not matching, it will say.
But how will share the means?
That is the technical issue. Again, wherever we find these kind of problems, my suggestion is that we need to attach a clarificatory sheets telling that this is the figure, and basically figures furnished in AOC 4 was whatever in lakhs or whatever.
Okay. I think Mr. Praveen will discuss about this, but again, the clarification is required by the people. And the simple question is about the unspent amount. So if the company's CSR obligation is for the calculation purpose, let's say 100 rupees and 2%, that is 2% of the average net profit that company is approved and required to pay for the CSR purposes. And the company has paid this amount 100 rupees to the trust as per agreement between the company and the trust. And there is an unspent amount of rupees 20 with the trust. Do the company need to transfer this rupees 20 into a special bank account?
So by the spirit of the law, I'll say yes. The company is very much supposed to question the trust that I gave you 100 rupees and why there is some money unspent. As far as there are two laws which becomes applicable here. One is the CSR law, which says that the money should not remain unspent. And if there is unspent money, that should be treated. The second one, which applies over the trust, which is the Income Tax Act, according to which, as far as my knowledge is concerned, some 85% money should be spent and 15% money can be kept for the purpose of maybe next year or whatever. But there could be two treatment to this. First, the company can ask the trust to give the money back, and it can be parked in some unspent account. That could be one of the treatment. The other treatment could be the company have a proper documentation with the trust that how that 20 rupees or 15% money which remain unspent would be utilized in the year to come. And that agreement is well documented. This is how the board the company will also have to look into it, that whether that 15% or 20 rupees is been well utilized in the next year to come or not. So proper monitoring should be done. This could be the two possible treatments for it. As far as the spirit of the law is concerned, whether that money is unspent with a company or with a trust, that should be treated as an unspent money. As far as these foundations to the companies are concerned, the law doesn't apply over that foundation. The law says that once the money has been transferred to the trust or to the foundation, the company becomes eligible for qualifying for CSR compliance. But at the same time, the company also has to ensure that they are just not transferring the money to the foundation or to the trust, but they are also ensuring that the foundation and the trust has properly implemented the project by spending the money, which I have talked about the effective responsibility of the board also. Therefore, these two treatments are possible if the money remains, let's say, unspent.
So what crux I can
Sorry, I would like to intervene here. Because this is a practical problem and this is a challenge faced by many of the company sectors, I'm sure. No, the question is, the CSR committee will have to monitor, the board will have to monitor. Now, unless we monitor and see that it is implemented properly and fully, obviously the money is not belonging to the trust. The company will have to get back the money, there is no doubt. Now, if the company is unable to get back the amount, what is the course of action? This is definitely a legal issue. I think we will have to address that, because If we do not enter the money as not spent, it is a wrong statement. If we say it is spent, then also it is a tick list issue. According to me, it has to be now taken up with MCA, and we'll have to see how this should be addressed. Because merely giving money to a trust or a society doesn't end the responsibility of the CSR committee or the board of the company. It is our responsibility to monitor, right? This question has been deliberated many times by me also with some of the colleagues, and there are divergent views. But my personal view is that it is the responsibility of the company to ensure that the money is spent. If it is not spent, then we need to, face
Sorry, sir, please go ahead.
Position taken by the ministry.
I just would like to add, at times this happens that the company would transfer the money maybe in the last quarter, the Q4. You receive the money in a trust or in a foundation in the month of March, and the company would be expecting the trust or the foundation to spend that money in that very month itself, which practically becomes impossible for the trust or the foundation or the society to spend that money. In such scenario, the company expects that they becomes compliant because they have transferred the money. But actually, by the spirit of the law, if you look at the interpretation of the law, the company is just not supposed, as Srinivas sir said, to transfer the money, but has to monitor the spending of the money also. And just not that, the impact assessment as well, which is the new addition to that law.
The point is, see, wherever the company is unable to transfer to unspent account, obviously it is not able to transfer to special fund also within 6 months. So that is where the violation happening. We have to see the legal aspect as well the practical aspect.
Well, if I have to make a recommendation to the ministry here, I would perhaps say that the money, if has to be transferred to the foundation or to the trust, it should maximum be transferred by Q3 of the financial year, so that at least 1 quarter is there with the foundations or the societies or the trust to spend that money. Otherwise, it becomes very, very practically, a difficult proposition for them to spend the money and to report also about it.
So, Mr. Praveen, what I understood from your point, if it is the company's own trust or company is doing the CSR activities on its own, the unspent amount which is lying with the trust should be taken back after end of the year. Number one. But number two, if it is an outside or third party NGOs are there where the company has contributed, let's say what you are saying in the month of January, company has contributed, and it's highly not expected that the trust will be able to consume or spend the entire money 100% lying with them. But the company will not be in a position to take back that money from the NGO, and I don't know NGO will be practically it's possible to give it back to the company or not. So then in that case, company is free from the liability of the CSR provisions, but though the spirit of law is not there. But technically speaking, it is not in the hands of the NGOs to give it back money to the company, and it's not in the hand of the company also to call back that money because they have not spent the money fully. But I believe in such scenario, you may please clarify, the company is not a default in the present scenario, or it's not a non-compliance on the part of the company. But yes, if required, the company can take a clarification from the NGOs that the money has been spent or not.
I feel as if that clarification is obtained by the company from that very trust, then the company becomes compliant, of course, because kind of a responsibility as far as the law is concerned is done. But by the spirit of the law, the company should pressurize that very trust to spend the money in a form of a cash flow, which has been agreed between both parties. That should be practiced. One should not wait for the end of the month.
Now, what would happen if, let's say, the trust is saying that they have spent 50% of money or 60% of money? Whether company should accept that kind of undertaking, or they should wait for the 100% money to be spent?
See, the document should be as strong as company is bound to question that very trust, that why didn't you spend? Let's say if there is an agreement between a company and a trust, and the agreement says that this is the cash flow that by Q3, the entire money should be spent. And if this is not spent in that case, with the report, the company will get to know and the company is very much supported to go legal also in that status. So why not? And yes, generally, see, I haven't heard any case so far that any company has raised a, kind of a legal question so far to any of the trusts so far. But at the same time, to ensure it, there could be further proper documentation that this money, if remained unspent, should be utilized by you in this manner. And that document between these two parties should be signed. I feel that is the only possibility today, because there is no other choice which actually the law is prescribing to my learning, to my understanding so far.
Only thing, sorry, Mr. Soni. Only thing, when we file the CSR-2, what date we'll mention for completing the project? Is it the date of transferring the money to the implementing agency, or what is that?
I think this has to be the date of transferring of money,
because this is a relevant question for capital asset creation. Capital asset creation, this problem will arise.
Okay.
For a non-capital asset, maybe it's okay. But when it is a question of capital asset creation, you will have this serious problem. And we are required to give the property location, various things in the form, as we have seen in the form. So that is where we will have technical issues. There is no question about that. Legal and technical issues will arise. Probably we need to take up with MCA and see how this can be addressed.
There's one practical question. I would request both of you gentlemen to kindly give me a brief on this. The question says we are filing the form CSR-2 for FY 2021 and inserting SRN turnover net worth details etc. for the FY 2021, and it is showing report for unspent CSR expenditure, which in turn means that CSR is not applicable. However, the CSR is applicable as per section 135 for the year 1920, that is preceding financial year, as we have crossed the limit for providing of turnover net worth etc. Request you to suggest how to file the said CSR which was applicable from for 2021, and we have spent for the 2021 also.
We have filled up and there is no such problem we have faced. Whatever calculations we have done, what we have spent, and auto population in the form, it is matching. There is no issue. We have not found any such error.
So the question is asking about report for unspent CSR expenditure. So let's say it is first time applicability is there, then there would be nil amount as an unspent CSR expenditure.
As I said, there are three scenarios. Okay, one is unspent scenario, one is excess spent scenario. The third one is surplus. Of course, surplus, we'll forget it. That is a surplus generated out of the money earmarked maybe through interest, etc. That we'll forget. So only two scenarios for us is relevant. One is excess spent, one is short spent. The company will know because how much is the obligation and how much is spent. So obviously, if there is shortfall, it is unspent. So that we will know. There is no issue, and that is also generated in this one, your CSR-2, because as I was mentioning, negative figure and positive figure will appear. The positive figure is a shortfall. You need to add to the figures of obligation.
Okay. There is a bunch of some small queries. How to deal with the decimal figures in CSR obligations? So that is over amount can be spent.
If I have to answer this question, then I would say, go for the decimal. Don't let this question to get arise. Suggest you would that if the amount is, let's say, 25,000 rupees 250 paise. So let us spend 25,001 rupees to be on a safer side. Why do you allow the situation to get into this complicated? See that if the law is saying 2%, it is just 2%. It is not 1.99999%. It is 2%. So technically, I don't know. I mean, this is how I can address to this question. Maybe Srinivas ji can further add to it that how this treatment can be done?
Yeah, I think normally we round it off. We don't want to get into issues. But having said that, I think there is a minor shortfall of few rupees. I don't think that will be a serious offense. That can be made up within it. I
Is it
think
to round off in nearest 100 rupees or nearest 1000 rupees just to make it a complete obligation, so that any excess amount is there that can be set off in the next year obligation now.
Also, yeah.
Correct. So, and the next question is, in case of project carried out on pan-India basis, all the state or district should be mentioned, or how it can be covered?
Yes, the form is very clear. It in the table drop down, you will see area, state, then district, everything is available. So we need to go and click where the project is implemented.
Okay. Yes, I think it is good to clarify with the intervention plans and the clarity of interventions wherever this has happened at pan-India level, all the states, union territories, everything is covered, and then respectively the districts and the places where it has intervened.
Yeah, that is what I was mentioning. In the drop-down table, below that you have add and edit button. So you go and click add button, then it will take you to the state, enter the state, then go down and click on the district. District automatically is taken, then you can proceed. So that's how we need to complete for all the projects across India.
Okay. This also has the intent to bring transparency, and that is why this is this much elaborated. And that's why all the sets of states and the union territories, everything is captured here. So that transparency can only be ensured if all such details in an overview should be presented in the form of a report, board report. And that's why this much elaborative, detail is desired today by the ministry.
There is one question that the form requires to be mentioned whether CSR amount has been spent. So whether the same to be construed as the entire CSR amount is to be spent? I will yes. Cannot be partial.
Yeah.
One question is serial number 2 item for the list of activities in schedule 7 under point 7 second. Unable to select various items for an item numbers as the amount spent for project is aggregate of all purpose in sub items. How to deal with this?
Yeah, you are right, because this is a practical case we are also seeing where the companies engage the implementing agencies and say a couple of projects. But honestly, it would be better for the formulation stage itself to say what is spent on education, what is spent on probably environmental protection, or I think it is better to segregate and then allocate the funds for each of the things, and then it is easy to select. Otherwise, we'll have this kind of problem. So this has to be just addressed by giving a clarification. That's all. Nothing else.
The beginning year planning, where how would you be disclosing is also important. Therefore, all such thematic areas should be earmarked in the beginning of the year itself so that such ambiguity while disclosing does not arise. And your, the account department is also allocating the money and capturing the expenditure in those very heads itself, so that towards the end of the year when the disclosure is desired, such disclosure are falling in that alignment itself. That ambiguity can only be addressed with prior planning.
Mr. Praveen, practical question is regarding in form CSR-2 mandatorily ask for the CSR-1 number. How can we insert such number if the company has donated to the trust before January 21?
This I have not looked into. I'm sorry.
Mr. Praveen?
Yes, sorry. Was there a question to me?
To mandatorily ask for CSR-1 number, how can we insert such number if the company has donated to the trust before January 21?
Right, true. So yes, this is also one of the practical situations. It's there. And, again, I would like to use this terminology called donation. It's just not that donation. It's a money which is there for the purpose of project implementation, which has certain details, I would say. Okay.
Mr. Murthy, when associate DSC option will open?
Yeah, only after all the fields are properly filled up, then only we will be able to go for pre-scrutiny, and then if there are no errors, only we can fill in.
I mean, we are not able to reach to that option actually.
Yeah.
In CSR committee for the year ended 31st March 21 had 2 directors. The said 2 directors have resigned after March 21. I am unable to input the details of the form since they have not to the company. Also, the 2 new directors who have been appointed in the CSR committee after March 21 have not been attended any meeting for the March 21. How to deal with this kind of situation?
That is the scenario I also mentioned. During the year, the director was there. Later on, he goes out, he resigns. KYC is not done. Obviously, the field is blocked. Then how will you go and file the form? We have practical issues there. We need to, I don't know, we need to enter the correct CSR committee details and then go and give a clarification by way of attachment. That's the only way if you want to file the form. Otherwise, the form will not allow you to file, you know.
Mr. Praveen, if the contribution for the year ending 2020 is paid by the company in the year ending 2021 without creating an unspent CSR account, how this amount should be reflected in CSR-2?
So the unspent money that has to be shown in CSR-2, is that a question?
Yeah. No, the amount has been spent, but it has not been specifically shown into unspent amount account. So how this will be shown into the CSR-2 form?
I think this would require possibly an annexure to be added, because I don't think that there's a particular format for it where this can be shown. So an additional annexure perhaps would work, to my understanding. Maybe Srinivas ji, if you can suggest some other better way.
The point is, if there is a shortfall, obviously the form will not allow you to go through. That is a question we are addressing. Because it is all auto-generated, you know, the auto-populated numbers are there. So unless the amount is transferred, you will not be able to really proceed with the form filing. This is a big challenge. That's why I was mentioning, if there is a shortfall, there is an issue.
Mr. Srinivas, a similar question is there, which you discussed earlier, that while doing the pre-scrutiny, there is difference between the turnover network, which we are here and 4 experiment.
Yeah.
But is the difference of nomenclature, the 1,000 rupees or millions or lakhs of rupees, or we should put the same figure what we are putting into the AOC4?
Yeah, AOC4, whatever is filled in, same figure will have to fill in. Otherwise, it will not go through.
Correct. Does the corporate need to report the funding for asset created or refurbished for an NGO? The asset is of NGO and not of the corporate.
Sorry, I didn't get your question.
Whether the corporate need to report the funding for assets for an NGO. The asset belongs to NGO and not to the corporate.
Actually, see, here you are creating a capital asset for the benefit of common good. It is not for the benefit of the NGO. So obviously the asset will be for the common good, but the asset cannot be held in the books of the company. The asset will have to be transferred to the name of the trust, and trust will hold the asset or the Section 8 company.
I can take a practical example. Let's say if a company donates some computers to an NGO for implementation of a digital literacy program. So technically it's an asset which has been given to the trust for the purpose of imparting the digital education program. So in that case, that would not be shown as an asset for the company, nor it is the asset for that very trust. It's an equipment which is the need of the project, which has been provided for implementation of the project. Therefore, that should be treated as a project expenditure for that very project NGO also.
Yeah, you are right. As long as the benefit is not directly going to the trust, then it is okay. It should be for the benefit of the public.
Right.
And it is not forming part of the trust asset as well.
There could be some of the infrastructure project also. Let's say if there's a community building which has a need in an area, and the building is being utilized for the community benefit purpose, and that falls under the head of a particular NGO who is our implementation agency. So technically that building doesn't actually become an asset for that very NGO, but it is a product which is capital in nature, but again, asset in nature, but again, that is going to be utilized for the purpose of the project, and this is how this is going to benefit to the community, and should not be treated as an asset for that NGO, and not at all for the company as well.
If I may add here, probably for the trust, it is like a off-balance sheet item.
Yes.
We do have last few minutes, and I would like to touch upon the remaining questions on a fast basis. Companies having FCRA number, although Section 135 applies on all companies, there is no provision in the form for filing the web-based reporting for such foreign companies having branches in India. How to comply with this?
Honestly, I have not looked into it because I don't have a case for such companies.
That's a typical situation. I never thought that, yeah, exactly, this could also be the scenario. But I think we need to reach to the ministry also about adding it on, because there could be contribution to the foundation under FCRA. So how to treat that? Or maybe possibly like, would there be a separate treatment for the FCRA funding? But the FCRA money could, that has come for an implementation of a project in your country. So that has also to be specified to bring in that transparency. I think that desires further clarification and addition in the format, to my understanding.
Okay, there is one question about technicalities. By mistake, 2 application number has been generated for CSR-2 from different login. How to delete one of it?
I think we need to just go and take the help of the ministry only, or we will have to leave it. It will be lying in the existing applications.
Okay.
And be smart not to create 2 of it.
No, it would not have been filed, right? It would have been just generated and kept there. Don't file it. That's all.
One of company has paid the CSR amount payable in 2021 on September 21. Payable for 2021 is paid on 2nd September 21 in PM CARES fund. In point 7, I have mentioned that the amount for the financial has been spent. Is this correct? As the money was spent after 31st March, but before 30th September 21.
I think the provision said that you can transfer within 6 months. So that should be all right. Maybe it's a technical issue in the form. The law says very clearly 6 months.
Okay. Mr. Praveen, would the filing of CSR be applicable to the companies having calendar year 21 as financial year?
I think yes, but that would be factored in the financial year itself. There are few companies who are following the calendar year.
So what cutoff date would be the same? You mean?
Cutoff date should be the same. I am dealing with one of those companies who is following calendar year, but we keep the cutoff date like 31st March.
Okay. A company based on net worth is eligible for CSR, but company facing losses since past 3 years. Facing problem while filing the form CSR-2. Mr. Murthy. They are eligible as far as the net worth criteria is concerned, but they are having losses since past 3 years. So they are facing issues while filing the form CSR-2.
There is a liability to discharge that has to be considered. There is no doubt. Net worth being negative is not this one excuse, right?
These all questions are taken. We are facing another press court.
Technical issue again. Yeah.
Form CSR-2 available on net worth. While turnover, which year turnover? I think this is already covered. If CSR-2 is not applicable for 21, has become applicable under the. If CSR was not applicable for FY 2021 and has become applicable for 21-22, does the company need to file the form CSR-2?
No, because see, unless there is a trigger for section 135, there is no need. No. Because we are required to fill in the details of immediate previous year's audited financial statement. Then only your liability for the current year will arise.
Srinivas, the same question is there with me again. I think this is the people they are getting a lot of issues on this. The company is covered under section 135 by virtue of turnover. However, due to its negative net worth, net profit, the company is not required to make mandatory spending 2%. However, while filing the form CSR-2, there is an error that we fill in the zero figure as the CSR spending amount. Kindly advise.
I think these are all technical things probably we need to take up with the ministry and see that the form is probably amended. They need to provide some solution there in the form. Because it is auto-populated, that's the reason.
Correct.
I can even cite one more point that there could be some of the projects without spending also. That could be a supernatural condition. There could be some of the voluntary efforts. There could be some of the ways through which you do some of the projects, but you are not actually spending even a single rupee. I'm just bringing in that hypothesis also in front of all of us. There could be scenarios that companies are incurring losses, but if they are inclined and they are intended to do corporate social responsibility, there are many other ways to do it. There could be some of the voluntary projects. There could be some of the employees' contribution. There could be something called fund generation that all can be done where the spending is zero, but the CSR doesn't stop. The development projects are being done. I'm just bringing in this hypothesis also in this platform today.
So this question has been taken already, I believe. The requirement of having CSR registration number was effective from 1st April 21. Prior to that, obtaining CSR number was not required. Can the field be kept blank?
Yeah, because it is not applicable. The rule itself very clearly has stated that for the projects which were approved before April 21, it is not mandated.
In point number 6, the name of director as on 31st March or as on date to be mentioned. I think the same thing is again the calendar is there. My financial is September 22, August 21. Do I need to file this form before 31st March 22, Mr. Praveen? Again, the similar question is there.
See, even if whatever calendar year you have, but 31st March is the time which is there for this reporting for all the companies operating in India who are eligible for CSR. Therefore, we are taking and considering that 31st March deadlines for whatever calendar year you are following.
Mr. Murthy, what sequence is required to be maintained to fill up the tabular format of net profit? Which financial year to be mentioned first, the current or the previous year?
No, there are two things we need to keep in mind. Whether it is in sheet number 1 to see whether the company is getting triggered under section 135(1). That is the first aspect. Now, the second aspect is to arrive at what is the obligation and whether the company has complied with the obligation. We need to mention the current year's figures. So we need to look at the field and then we need to fill up the details.
One question is regarding the calculation, Mr. Murthy, if you can suggest. In calculating the net profit under section 198 of CA 2013, can profit on sale of mutual fund units under other income be deducted for CSR?
Section 198 is very clear. There are certain items which needs to be eliminated. For example, your profit on sale of mutual fund investment, profit on sale of capital asset, then your profit which is not realized, unrealized profit which are booked as profit, notional gains, all these will have to be knocked off.
I think we have similar sort of questions which we have completed and covered during this session. Let me tell you, friends, we have got more than 650 plus questions which we have tried to cover and sum up during this session. There were around 9,500 plus participants for this program at one moment of time, which we have seen might be increased later part also. This is a wonderful program which we had today, and a great amount of hard work and time has been given by the participant while responding to the query. So I place my sincere thanks to both the learned speakers for taking up this session and for responding to the queries in a wonderful manner. I place my sincere thanks to all of you and for listening peacefully to this program. I would like to thank Shri Praveen Khan and Mr. Srinivas Murthy for addressing and sparing of your time. And I believe this webinar is going to have a wonderful benefit to the participants. And yet there are a few unresolved queries which are because of the technical reasons, or we are waiting for some clarifications from the ministry side. But yes, I think we have really had lots of queries which has been resolved, because what I can see now, the queries which are coming now are of repetitive natures only. So thank you so much to both of my learned speakers, Mr. Murthy and Mr. Praveen Khan, once again from the bottom of my heart and from the institute. I would like to thank all the participants of this webinar, and I hope the participants are satisfied that their queries have been addressed. As a token of our appreciations from the institute, I would request my team ICSI to kindly place the Shahid Ki Beti certificate for my learned speaker. The present one is placed for Mr. Srinivas Murthy. Thank you, Mr. Murthy, for sparing of your time for the institute. It's also for Mr. Praveen Khan. Thank you, Mr. Khan. This is a token of love and affection from the institute side. And this is a Martyrs Daughter certificate, and the amount, on some specific amount on your behalf for this certificate, will be contributed by the institute to the Martyrs Daughter Fund of the Ministry of Defence, Government of India. Thank you so much once again. Friends, we declare the formal closure of this webinar, and any further queries are there, I think that can be taken up again later with the further set of speakers as and when we come out with a different kind of program. Thank you so much. Namaskar.
Thank you, Mr. Soni, for having me, and thank you, my co-panelist, Srinivas ji. Before we close for the day, I just would like to mention one statement that there are few things that can be done beyond the law. This responsibility is like that. Let's do that. Thank you very much.
Right. Thank you, sir. Namaskar.
Namaskar.